Okie dokie. So today we took our first loss of the month, which is fine. Risk management meant that we didn't lose too much. I think looking at my broker statement, it was 145 pips on the S&P. So we're still up for the month. It's just a shame really because we kind of, well, my £34.88 profit yesterday has now been reduced to £1.20, but we are still up for the month, so it's okay. Looking at the daily chart, you can see that we are still around this optimal trade entry zone on the higher time frame fib. However, markets are continuing to show very strong bullish sentiment, but the reason for my bullish entries today was because of this fib range. I did line up a second trade, but as I've learned from my years of being in the markets, if I take more than one trade per day, I'm simply just opening myself up to more risk, extending my losses, and at which point from previous trading, that tends to be where my mindset dips a little bit, and I'm more likely to open up to revenge trading. And I'm not trying to blow my account. I'm not trying to do that because with live funds it's a different story. With a funded account or a demo account, it's the implication of it isn't as strong. But on the live account, I'm trying my best, stick to my rules. So I took one trade today. I did get stopped out after PPI, and trading CPI and PPI back to back days is kind of risky. In hindsight, probably should have waited a bit more on my trade, but it is what it is. The initial idea eventually was correct after we had a bit more price action form in the New York Open session. So I'm going to drop down into hourly time frame here. You can see this is the second setup, and the first setup is hanging about somewhere in here. So what I was looking for initially, drop down onto the 15-minute actually. Yeah, so what I was looking for initially was, we got opening price here, price comes down, goes up. I was sort of monitoring this throughout the day. We had an hourly inverse fair value gap here that I was kind of anticipating, that we sort of stand here and then push up to take these highs, and not so much CPI highs. I wasn't really anticipating that big of a move. But so going into the session, we also have this order block on the 15-minute formed in yesterday's Asia session, just for reference. Going into the session today, this Fibonacci basically shows the premium and discount range between London and New York Open, which I should have ideally identified beforehand, just to provide a bit more context on where we could be potentially going. So what we're looking at here, let me just drop into the 1 minute. I think that might be a bit easier. I've got a lot on my chart at the moment. This yellow box here is the higher time frame optimal trade entry daily fair value gap that I've mentioned multiple times over the last few videos. We had a couple order blocks here. As you can see, this is a 5-minute order block. It doesn't look like it on the 1 minute, but on the 5-minute chart that is there. And then so coming into the session, we had, what have we got here? Thursday, 13th of March, 8:30. Where are we at? So this is the PPI candle here. You can see it wicked all the way up into this inverse fair value gap. And then we had some, just some accumulation. I was liking the look of this. I was thinking, this is looking like some bullish price action. We could probably see this taken and then further up, these highs up here. There's a fair value gap up here on the 5-minute chart or the 15-minute chart that I marked out. So where are we at here? think my entry was here. So we had this liquidity here, and I was, left this stop just underneath here, under this low over here, because of this fair value gap on the 1 minute, that I was thinking, maybe we could see price come back down into here and push back up in case my entry was a bit early, because as you can see, so my entry was actually around here. Let me just move this across. So you can see we got a lot of accumulation here, and I was thinking, right, this is it. We've got this down here, this imbalance. This will be the one, with this one down here being the emergency one for the stop. I was anticipating that now we had traded back down into this order block here, marked out this one. Let me just see where that is on the 5 minute. Yeah, so this previous 15-minute order block, I was anticipating that to act as, a nice little push up. But unfortunately, I was a bit early in the session. I should have waited for the 10 a.m. reversal. This would have been a beautiful setup, 3.5 risk to reward, but we'll get into that in a moment. So, my initial break even, I think, is one of these lines over here. Did I delete it? I think it's this one here. Yeah, so I was looking to go break even on this point here, targeting these highs up here, so just beforehand, and you can see this line lines up with these highs, so I was looking for a nice push, which we didn't get, and I was stopped out for 145 pips at 10 to 10 New York time. So yeah, it's one of those, you take losing trades, it happens. So after that had happened, we then looked to this other setup that I did draw up at the time. So you can see here the sell side liquidity gets swept, coming up to 10. That just gets taken, and then we get a nice reaction up. And I was looking at both NASDAQ and the S&P for, a break of structure, really. I wanted to see one of these candles close above. We were sort of torn with this fair value gap here. I wanted to see one of these candles close above this candle here. Same with NASDAQ. So this is this candle here. I was still thinking, we could see this move play out just off the fact that, we get this, tap this order block, and then just come straight down. So that was kind of what was going against my idea of the trade for the further push up. However, what we did get form, I think it's on the 3 minute. Yeah, on the 3 minute chart, we get this inverse fair value gap, which was, I was looking at this like, right, this could be potential. I was waiting for it to come a bit higher up, but price did just push down, tap this, and immediately start pushing up for a lovely move. If we look at the 1 minute, you can see a bit more clearly how the bullish structure forms. So, you get this order block here, tap into this inverse, bang, we have this, move that back. So this fair value gap marked up here was my point of interest. I did initially, well not initially, I did move my target down from this original TP to, now that we've actually taken this, it does look a bit more bearish. So we've adapted for the take profit to be in this fair value gap just underneath. And as you can see, if we had taken this trade to the bloody pip, mate, that would have been to the pip and then a move down. So yeah, a bit of a bummer today, but I'm not going to complain. We're still up for the week. That would have been a total of what, 566 up to 598. So what is this? This is 145 down here. So what? 587 down to 574.10. I'm not actually sure how many pips that would be off the top of my head, but yeah, I'll do the maths on that afterwards. But you can see that would have been a nice 3.5 risk to reward if we were to have a limit order placed in that inverse for 0.7%. You can see 27% risk for almost 100 quid profit, and that would have been absolutely lovely. Does it say how many ticks that would have been? Yeah, 316 ticks, but yeah, so 316 ticks, not pips. So you get what, four ticks in a pip. So every 0.25 here is 1 tick. So 316 pips, divide that by 4, I guess. What is that? 316 divided by 4. 79 pips. But we would have had a better risk to reward on this, so it just goes to show that, you know, after PPI we had literally pretty much not bang on 10 o'clock, but from 10 o'clock we had a 10 o'clock reversal all the way up to 10:26 where that would have taken profit. And yeah, following that we see price and the overall sentiment in the market remains bearish, as seen here, and we just continue to push down towards the end of the session. Yeah, one of those, first loss of the month, like I say. I'm kind of repeating myself a little bit, but yeah, just something to learn from, really. I'm not mad about this one. It's just a bit of a shame that we couldn't get the second one, but I did stick to my rules, so that's the main thing. I was very much contemplating getting into this, but by the time I actually had the chart ready to go, you know, this candle I'd already pushed up like halfway here, and you know, if I'm then entering long on a market order there, the risk to reward goes from like what, 3.5 to 1.5, and I've already taken a loss on the day. You know, it's not worth it. It's not worth taking. Just leave it, you know, learn from it. It's fine. But yeah, I think that is going to be me done trading for the week. I've got some stuff going on at work tomorrow, so I don't think I'm going to be trading. Don't anticipate we have much news for tomorrow. I think it's just 1 or 2 events coming up. Just double check. Tomorrow, March 14th. Yeah, consumer sentiment, 2 o'clock. So that is 10 p.m. 10 p.m. 10 a.m. New York time. I'm so confused with it now that the time daylight savings has come back. So yeah, I think I'm just going to call it for the week. That's another video. Whoops, there we go. And yeah, so overall profit for this week is £48.52, and yeah, it's fine. It's a good start to the first week of March. I'm happy with that. A few learning points to take away, and yeah, I think what I might do on Saturday, because I've got work due tomorrow. What I might do on Saturday is, you know, full weekly review, as well as next week weekly overview and predictions. I'll have a look at the news that's going into next week, and just try and get like an overall sense of where the market could possibly be going, because although we are picking up these nice moves on a swing trade, you know, we are still seeing overall bearish sentiment in the market. And yeah, I know for a fact that my actual portfolio has taken quite a hit in the last couple of weeks, where I just basically hold everything long for the long term, not trading it. I'm just holding, and as you can see here on the daily chart, shit, man. I mean, we could even possibly see this maybe clear this before a move up, but yeah, I mean, it is what it is. Markets have to correct in order to proceed higher, and I think over the last year, when you look at it from, I don't know, 2024 going into 2024, 4120 on the S&P up to December, 6,000. That's a bloody lot of pips, mate, in a year. So corrections happen. We'll see how we go. And with that, I think that should cover everything other than, a bit of S&T there. Yeah, call it there. Nice review. Unfortunate today. Stay stronger going into next week.